Welcome to the Jay Tyner Show, where we discuss all things wealth management and retirement planning. And as always, the goal of our team here at Semmax Financial Group is to help you focus more on your life and less on your money. Now, as a reminder, check with your current advisor, planner, CPA, and read our disclosure in the video description below. Subscribe to this channel if you want to stay up to date on all of our new content. And by the way, if you have questions or need a 15-minute free consultation, please visit semmax.com or call 336-856-0080.
Hello and welcome. My name is Matt Landon. I'm joined by Michael Sellers, and today we're going to tell you a little bit about ETFs. This is going to be a little bit different than some of our other videos. This is going to be a little bit more of a free-flowing conversation. We have some main points we want to address and make sure we go over, but let's start off by just talking about ETFs. What are they? How do they work? What's the point? And I'll just say this. An ETF, at its most simple basis, is a fund. It is usually a basket of positions that are inside of that ETF. Now, those positions vary. Some of them are stock ETFs. You have bond ETFs. You can have commodity ETFs. You can track particular indices. There's a lot of different things. But at its core, an ETF is an exchange-traded fund, meaning it buys and sells like a stock. You can buy it at 10:30. You can hit sell at 10:45. You bought it, you sold it. It's done deal. Now, with that, there are some pros to ETFs. There are some cons to ETFs, and I don't want to dominate the conversation. Right. So why don't we run through some of those?
Yeah. Well, one of the pros is they're great for if you're starting out or maybe have limited funds. But you want to get that diversification,
right?
And you don't have hundreds of thousands of dollars to buy individual stock positions. You can start an ETF with probably $100 and buy the entire S&P 500 and at a relatively low expense ratio, very low.
Right.
So it's an easy way to get into the market, especially for those younger investors, people starting out.
I would say one of the cons to ETFs is because it is that broad market, you don't have as much control over the individual positions. You can't say, I specifically want to buy this share. I don't want to have any of that type of thing. It's not necessarily the end all of problems, but I think it's something to be aware of, because if you told me I really don't want this particular company, well, inside of an ETF, you don't have as much control over that. But you can, and this is a pro to them, and this is the way we use them here at least, is you can have specific sector ETFs so you don't have a ton of overlap. That is an advantage that ETFs have over mutual funds. Another one being that buy and sell, right? Because it buys and sells like a stock, you're not waiting until that NAV that a mutual fund will put you under. Now, when it comes to them being active versus passive, I think there's an argument that could be made a couple different ways. Where do you land on this? Are ETFs active or passive?
Yeah, I think the majority of the good ones are passive.
I would agree with that.
Passive and index, based on an index. They serve a purpose and work well for that purpose.
And with that, you can. I've had people ask, well, can you do options tradings on ETFs? And you can, but my response to that would be, why are you wanting to do that? That's kind of my first question.
Right. It's a slippery slope. There's ETFs that are leveraged, and you don't want to do an option on a leveraged ETF. You can get into big trouble real quick.
That feels like a stacking, and that you can teeter and fall pretty hard, pretty easily there.
Right.
Now, what about taxability when it comes to ETFs? How are they taxed?
They're going to be taxed just as if it's in a regular non-qualified account. It's just as if your long-term capital gains, short-term capital gains, based on that 12-month rule.
Yeah. So I like that. I think that particularly in the non-qualified account, I think ETFs are a good option to go with, particularly with that smaller account as well, because you don't have as much of that diversification. But one thing that I like about them is the liquidity, because you may not want to hold it for 12 months. Well, you don't have to. You can sell because it buys and sells like a stock. You've got a lot more liquidity options. Now, you touched on this earlier, but what about the cost side of things? Because I think it's important to understand ETFs, there is a range of ETFs. And I know a lot of the ones we use, the fee is anywhere from 0.06 to 0.09%. I'm okay with paying 0.1% if we need to use an ETF. but some of them are a lot higher, and I don't think we want to pay, you know, 0.5%, 0.75%. You do want to keep an eye out on it so that the cost is something that comes into play. And what about let me ask you a really basic question, and
Okay.
you tell everybody, how do I buy this? And are there any disadvantages of one place or another place? Or
Right.
I'm just getting started. How do I even step in? You've sold me on ETFs.
Right. Most any brokerage account, you'll be able to purchase ETFs. Now, certain families may or may not be available, but in general, you can buy a very wide range of ETFs in any major brokerage account on your own.
So, for example, if I want to buy a Vanguard ETF, I don't have to have a Vanguard account. I could do that through Fidelity or Robinhood or Charles Schwab.
Right. You can buy it on any platform, and most of them are available despite what brokerage account you have.
Yeah. So I would just say this, when it comes to ETFs, clearly there's a lot to know about them, but they are a really good stepping stone into investing. I think there's a lot of options out there. You really want to be checking your cost. You want to be checking what kind of expense ratio there is. You want to be looking at what kind of underlying investments are inside of here, what kind of risk am I potentially taking. One thing that I would say is a con to ETFs as well as a con to mutual funds is if you don't do any kind of due diligence, you have no idea what that fund is invested in. And you may think, well, this is a bond ETF, I'm inherently conservative. You could be in a very, very risky junk bond ETF that's chasing that high yield, and you're taking a whole lot more risk than you think you are.
Right.
You also
it'd be trading like a stock. pretty much.
Exactly. So when it comes to them, I think it's important for you to know what you're purchasing, what's the impact that's going to have. But overall, when it comes to ETFs, I think they're a tool. Like anything else, there's good, there's bad. You just want to make sure you have the right tool for the right job. Don't grab a crescent wrench when you need a hammer.
Exactly.
All right. Do you have any other thoughts? Or
No, I think we covered most of it.
all right. Well, if you have further questions, don't hesitate to give us a call. We'd be glad to talk with you.